Can you guys hear me? Can somebody just type yes, yes, no, maybe? So, all right. So Trump is obviously yapping right now. He's talking, and let me open my uh, feeds. 1 second, so we can say. By the way, before I start, now I'm gonna make a video. Remember, sec. Let me just pro. One sec, guys. There we go. Almost done. 1 second. Just since Trump is yapping, I want to have that open, see what the hell he's talking about. I think he already said everything. One sec, guys. Let me just finish this. All right. Jesus Christ. Scrolling through news. 1 sec. We'll start in a second. So you can see volatility in gold is happening, obviously, because of the what Trump with the Greenland situation. So they're dumping U.S. dollars. Gold is being a hedge. Again, this is all ties in into the fundamentals. This is all fundamentals driven. This is nothing tech. Obviously, the trend is up, yada yada yada, but it's driven because of the narratives that are being pushed through the markets. And if you don't understand these narratives, you don't understand what the fuck is going on with the price. You need to understand. Um, these are, as you can see, Trump is now talking. So he's trying to right now to he's trying to appease the European crowd and giving them compliments during his speech, saying, "Listen, guys, we respect you. This, that, blah, blah, blah. We just want to take care of Greenland because so China and Russia doesn't have it or whatever." So he's talking right now. He's yapping right now on the subject matter. And if you don't understand these principles as to you, if you're not following the fundamental news, you're not going to follow what the why price is doing what it's doing. We are gapping up. This was the Sunday gap open. We've been rallying ever since. I think gold is obviously way overbought right now. I'm actually short, so I've shorted the gold, even though it's against the trend, but it's way overcooked. So once in a while, I do go against the trend because Trump is he didn't want to. I think he initially didn't want to go to um, the World Economic Forum that is happening right now, but he is now, and he's obviously giving a speech right now, and he's trying to make things right. Okay, so look at gold go now. Let me see what the hell. Let me see my positions too. So yeah, fuck. 1 sec, guys. Sorry, it's just everything is happening with the live as well. So gotta. Mm-mm-mm. Come on. So remember, by the way, when we left off on Friday, remember we were here. We were right here on Friday when we left off. And we were rolling over. And I said, do not short this. This was a liquidity grab. And once you see this candle, they're going to pop the stops above this point. If you're going to rewatch, the Friday's webinar, I literally said we're going to pop these stops and then revert. And then when you should be buying long-term level. And look how it played out. It played out exactly to the motherfucking level, turned around and rallied. Literally told you they're gonna pop the stops. Watch the fucking webinar. I'm gonna clip it and I'm gonna post it on social media. Literally, when we were here, I told you they popped They first pop these assholes here who were impatient and trading consolidation. Then they're gonna pop the assholes who bought this momentum prematurely and not to piss against the trend, right? They're gonna get popped first before the price goes down. And where is it gonna go down? It's gonna go down to its big level. What's the big level? Right here. You connect the fucking dots, turn around, bam, off we go. All right. So I'm gonna clip it because if you want to understand the price, that's what reading price action allows you to do. You literally foresee the future, and all you have to ask yourself, if you are a market maker, what's the how would you screw the most amount of people out of their money? Okay, and that's exactly what played out. One second, forgot about it. Okay, all right, gold. Let's see, futures. Futures. Okay. So what is happening right now? Right now, gold is rallying on the news that the Trump is being obnoxious with the Greenland, et cetera, et cetera, et cetera. Right? Whether he's being obnoxious or not doesn't matter. That's the perception, and the destabilization factors are sipping in through the risk-off environment is sipping through the markets, and that's what we're getting right now. Um, that's why gold rallied. However, these opening gaps usually get closed sooner or later. So this is way overcooked, and I think the minute there is a whiff of stabilization, normalization of the environment, macro environment, I think that gold will actually tank as a pullback, and you can see this that silver also had its opening gap on Sunday. However, it hasn't rallied much. So this is an exaggerated move. Again, you have to put everything in a context. When do you trade against the trend? Not every fucking day, but when there's an exaggerated move caused by an outlier, which will be reversed, then you can trade the reversal. All right, because it's an outlier. Again, is this a high probability trade? No, it's a lower probability trade. The ideal trade would be to buy here once the gap closes into the direction of the rally. But if you want to learn how to trade against the trend, this is how you do it. You have to stack at least some probabilities. So this would be the ideal trade, buying right here after you see a turnaround, after you see a turnaround candle. Okay. So it will happen, but for that to happen, you need some macro news to hit the markets that will allow traders to use it as an excuse to drive that market makers and big traders to drive that price to those levels. Okay, I'm just reading the Trump commentary while we're on the air. This is more important than anyway. Let me dive into some. Yeah, see, this is the volatility. If you're trading on 1 minute chart, yeah, one news can yeah. This is well 5 minute chart, whatever, right? In 5 minutes, first it went up. It's in 15 minutes it did 40 points, right? In 20 minutes. That's a hell of a volatility, and this is just the beginning. So, like I said, so you have to have wide stops. This is why I prefer wide stops because wide stops allow you not to be wigged out if you're trading in these environments. So that's why you need to reduce your position size and have wider stop because you increase your chances of winning the trades. Otherwise, if you're gonna be one of those sniper entry 2 pip stop loss bullshit, you're just gonna be eating stop losses forever and ever in this particular macro environment. All right. So let's see. Working from my end, can you check the live chat? Uh, somebody said something about YouTube. I think. Anyway, so I think your YouTube is working. So let's take a look. Hold on. It became convenient wisdom the Washington and European capitals that the only way to grow the modern Western economy was through ever increasing government spending and check mass migration and endless foreign imports. Yeah. Shit. Trump is fucking putting on the heat. USA is the economic engine of the world. When America booms, the entire world booms. Blah blah blah. Okay, okay, okay. Yeah. Okay. Anyway, Trump is still on the wires. Trump. Greenland is part of North America. It's our territory. Whee! All right. Now I'm asking for a piece of ice. A very small ask. Wow. Nice. Nice. This is incredible. So this destabilization is causing this volatility. Again, if you're just trading ICT, smart money concepts, you have no idea why the fuck this is happening. You're like a fucking retard. You know, it's why would you limit yourself to just one thing? Your job as a trader to take in all the information, process it correctly, and come up with the scenarios and biggest probabilities that it to occur. And if you're just limited to technical, so just the fundamentals, so just imagine driving a car with just one feature of a car instead of the whole complete package, right? So you need to combine fundamentals and technicals, and nobody talks about it. There's a lot of bullshit artists tell you, it's all technical, or other bullshit artists, it's all fundamental, like old school motherfuckers. But ideally, to be the sniper, to be the scalpel surgeon type of trader, you need to have both. You need because understanding fundamentals allow you to understand what's happening in the big picture. Once you see the big picture, then you use the technicals to execute the trades into the direction of that big picture. All right. So right now, like I said, I'm short gold. And I'm short gold. It's a risky bet. It's against the trend because Trump can just say something and this thing is gonna go another 20-30 points up. So if you're pissing against the wind, if you're trading, you need to account, you have to have wide stops, okay? Because otherwise you're gonna get you're just gonna getting stopped out, and et cetera, et cetera, et cetera. So um, I'm not saying you should be hopping on this trade with me. All I'm saying is if you are a novice trader, this would be the again. Say it's the same thing that happened here. I told you do not short it, and wait for the bounce area. So where's the bounce area now? Same fucking level. See, it's been respected in this general area 3 times. 1, 2, 3, almost here. So either trade this 200-day, 200 hourly moving SMA, which you can see it's providing very decent support. So big traders, remember, gold traders, bank institutions, and hedge funds, they're not trading the latest and greatest technical bullshit. Okay, they're trading true and proved systems, and there's nothing more technical than a 200-day moving average, or in this case, hourly moving average. Okay, which is this line right here. All right, and you can see that the gold traders. So the pullback will come. All right. Your job is to be patient, wait for the for the dip to happen and buy. That's the high probability trade. Pissing against the wind is riskier. You can make some money because if Trump kind of normalizes uh, if he kind of makes EU not go crazy with this Greenland shit, if he can convey that whatever, if he can persuade him somehow, then this thing is going to go. If he makes a deal, obviously there is a deal to be made, and he is trying to make that deal. I don't know how he's going to make that deal, but he pulled off bigger things. Okay, she just said it. Seeking immediate negotiations to discuss acquisition of Greenland. U.S. doesn't want to use excessive force to get Greenland. And if he wants Greenland, he'll take fucking Greenland. There's nothing EU is gonna do. They can't do anything about it. They're fucking retarded cocks. You know, cocks as in not as dicks, but as in somebody who watches somebody get their wife getting fucked because they're watching their countries getting fucked for the last 20-30 years, turning fucking EU into a goddamn shit show, right? So it's becoming unsafe. Economics are fucked. They're ruining the goddamn place, the politicians. But anyway, we're not here to discuss politics. Let's see. Trump double stock market did peanuts. Stock market will double. Blah blah blah. Still same old, same old. So yeah. So we unfortunately with these big macro themes, we have to watch. These are the drivers of the market right now. Nobody's watching at the fucking technicals. They'd be like, let's execute on the candlestick. Nobody gives a fuck about a goddamn candlestick right now at all, at all, at all, because everybody's glued to what Trump is saying. Because based on what he says and what he can do, the markets will go that way. That's it. There's no mystery fucking, let's technical analysis, super setup of the century right here. All right. So you first need to ascertain what the fuck is going on fundamentally. And that's why for the last 2 weeks I've been harping about the goddamn fundamentals. Because most of the novice traders, they watch these trade setups on YouTube and without a big context. And then they're like, okay, this one worked out, this one didn't work out. It's a 50-50 crapshoot. So you are more selective with whatever setup you have to trade with the technical setup. You first absorb the major fundamental key macro theme. All right. And every month, every year, there's short-term, mid-term, and long-term themes going on. You need to be aware of these themes. One of the biggest themes are what? The long-term one. Trump wants to cut interest rates to zero in the United States. Okay? And since last week also, euro rallied, right? So the dollar is being offered right now. However, the stabilization also kind of provides the bid for the dollar. But regardless, the big theme right now is Federal Reserve will be cutting interest rates. If Federal Reserve cuts interest rates, this is why the stocks, even when they barely down on the shitty news, they're literally still at all-time highs. Yeah, they've been down for a few days, but this is nothing. What is this? This is just a small pullback, for crying out loud. You should be this. It's still making. I mean, what? It's 2% off the highs. What is it? Yeah, 2% exactly. Exactly 2% of the motherfucking highs. Okay, so it dipped 2%. Whoa, right? The world is on fire, and all the dipshits on YouTube, they're like, okay, that's it. Sell everything, fucking get a bunker. And they've been saying all that's why you shouldn't be listening to gloom and doom and bullshit on YouTube. Understand that if Fed is printing money, this thing is gonna keep going up. It doesn't fucking matter what economics, what the situation is. It's simple matter of fact. So that's why you have to understand the biggest theme driver is the central banks and what they're doing, because they manipulate the economy. And if they manipulate the economy, if Federal Reserve is cutting interest rates, then the value of the stocks will keep going up because they're stimulating the economy. Even if there is a temporary dip, they'll cut it. That's what happened in 2008, right? They essentially we had the crash because Fed was late. I mean, yes, more visible. 2008. So this is the crash. Then they just started printing money up to wazoo with all the quantitative easing, and look what happened, right? So what do you think is going to happen here? This is what happened again during COVID. Well, I'm sorry, where is it? Here, yeah, right. This was COVID. Boop, print money. Whoop, right? So again, understanding this allows you to be on the right side of trades and not be a moron who is stuck in a what did he say now? Let's see. Yeah, so it allows you to understand where the whole thing is flowing to. All right. So now that's the Federal Reserve and the cutting of interest rates. That's the long-term theme right now, and that's why everybody's gauging the inflation, the what Federal Reserve will do, yada yada yada. Which is I think next week. When is? Let me pull up the calendar. When is where is our esteemed? What is it? Forex Factory. Sec calendar. When is the FOMC? I think it's last week here. Yeah. So 28th. So the next Wednesday, Federal Reserve will be either cutting interest rates. They're gonna broadcast their decision. They're gonna be Q&A. I'm gonna do it live with you guys so we can analyze the whole thing. and listen to him speak for an hour and a half, unfortunately. But that's part of work. There's boring shit happens, and you have to listen to it because this is what drives the markets, not some fucking ICT moron with his rented Corvette that he barely fucking can afford, telling you that there is a CC and BC and some kind of blah 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 technical mumbo jumbo bullshit he has come up because, yeah, when he was getting high. All right, forget about that nonsense. That nonsense is useful when you have a bigger context. And that's why he couldn't trade the fucking. He lost the Robin Cup and the all the. He can't. He multiple times got caught cheating and faking his statements. All this bullshit because he can't trade. Why? Because he only has one piece of a puzzle. He doesn't see the whole fucking picture. And every single bank in the world, every single hedge fund in the world, will first address the macro themes and pictures to understand how to position their trading and their investments. All right. So there's not a single hedge fund that doesn't account for that because you have to be retarded not to account for that. Even the quants, even the quant funds, they still account for news and macro themes, which is built into their algos. All right. Again, all of this is just Trump talking right now. So it all depends how the I don't even know if okay, U.S. won't become a nation of renters. Have signed over banning large institutional investors from buying homes. He's still yapping. So all of this is just volatility from him yapping. So, and this is just algo trading. This is not human trading, by the way. This is straight up algos dicking around based on the what Trump is talking about. They digest what he is saying and putting on their trades. Do you want to be trading against the algos who execute nanoseconds and they get Trump's speech as it happens live in nanoseconds while you're sitting on reading Twitter or whatever the fuck you're reading as a newsfeed? It's retarded. So let this fucking settle and then execute your trade. Trust me, you will have a pretty clear picture how to execute something once he's done talking. Okay, so let's see. We're gonna have stock open right now. Stock market open. Let's see. All right, let's see some questions. Oh shit. Da-da-da-da. All right. As you can see, stock market is still from from early and we've been rallying. Let's again stock market open. Let it play out 5 minutes for the book to be executed. Why do we wait 5 minutes at least minimum before we enter indices in the stock market? Because they have orders from overnight that are now being executed on the cash market. Okay. By the way, New York Stock Exchange is transitioning to 24-hour, 24/7 trading using tokenized blockchain. All right, technology. So that will happen within probably this year, next year, whatever it will happen. But the stocks will be tradable 24/7. But for now, since the cash market open is at 9:30, the most liquidity, most of the books get executed. Overnight orders get executed right now. Okay, so that's why you see it look bullish. Now it's bearish. So let that book play out, and you're gonna get a directional play revealed to you after 5, 10 to 15 minutes. All right. All right. Back to gold. All right. So Trump is still yapping. Jesus. Trump will announce new Fed chair soon. So again, when he says stuff like that, the news is again, if he's gonna bring the rates down, the gold is gonna pump up. Okay, so the gold is that's why gold has been bullish and for the longest of times. So obviously, this is why if you see this gap close, you should be a buyer because Trump will install a yes man into the Federal Reserve. And that guy is going to cut interest rates to motherfucking zero, or at least very, very low from what it is right now. By the way, Friday, Friday, we're going to have two guest speakers on Friday. We have two traders, Michael Bamber and CRE Trades. Those are two successful traders that will be on at the same time on Friday for you guys to, first of all, they're going to both showcase their trading styles for you. And then they're going to also, you can ask them any questions and, or me or whoever. And that's going to be, it's going to be, well, be there because it's going to be interesting. All right. So Friday is going to be a big day, 9 a.m. New York time, as always. Like I said, two guest speakers. I think you're going to love it. All right, I'm still reading the Trump thing. So again, I wanted this week. I wanted to do technicals, but technicals are completely irrelevant this week. You know, right now you have a gap open and endless rally based on the fundamentals. That's it. It's just strictly fundamentally driven because the world is getting the disconnected more and more. And gold is being obviously a gold is catching its safe haven bid. Okay, so that's why you have these gaps during the time of instability. Everybody wants to have gold. All right, nobody wants the dollars, nobody wants the euros, nobody wants to fucking whatever the hell currency is because gold will be gold. It's been so for thousands and thousands of years, and every toilet paper currency has been around what 100 years, 200 years. You know what does it mean? That means nothing in the context of thousands and thousands of years. So that's why whenever you see all this chatter about gold being passe, and obviously it was just central banks telling you nonsense to accumulate all the gold. And they've been buying ever since. All right. And the more the world gets uncertain, the more gold will go up. Very simple as that. Again, it's very, very simple. How do I save my some? Yeah, it's just fundamentals. Again, understanding these core principles of investing, life, or history allows you to just be on the right side of trading. All right, let me see some questions. All right, when do you mostly go against the trend? I only go against the trend at the very rare opportunity, very rare circumstances when, first of all, my position sizing is way smaller because you need to withstand the heat. All right, I do it as maybe 10-15% of my trading. Most of the time you're better off waiting for a dip, for a continuation trade. So you have to be patient for the dip and rebuy it instead of pissing against the wind. So it's always more riskier. You always there are less probability to happen. So as a novice trader, you should only trade with the trend, honestly. That's the easiest way. So in these rare moments sometimes, because right now Trump can say some bullshit and this thing rocks another 100 points, right? So and the technical gaps don't matter. In the time, it's again the fundamentals matter when if the World War III starts, nobody cares that there's a CB or BC or whatever the fuck the smart money concepts is telling you there is. Okay, there's gonna be just massive motherfucking panic based on fundamentals, and that's it. And there's gonna be a big fucking candle down. Be damned with the technicals and everything else. All right, there's gonna so that's why you have to be that fundamentals are you need to understand what's going on, and if you don't understand what's going on, you have no business in trading to begin with. So learn to understand fundamentals first and then start trading technicals. And that's what's a lot of you are missing. You watch 27 billion videos on YouTube how to trade and enter the trade and all that, but you don't understand why the price is moving that way, and if you don't understand why it's moving the way it's moving, you don't have certainty, right? You're uncertain, so you're just at the mercy of some kind of wiggly sticks on the screen. So, all right. I don't have a risk to reward against the trends. You basically have to gauge the environment. I'm being honest with you. You can't have a. I don't have stop losses on when I trade against the trend. I will have to close it if I see. It has to be first of all so small that it doesn't matter, and you'll have to take it off once some kind of. It's an art form. It's not really. You can't. There's no technical side to pissing against the wind. All right, you just have to know how to dance around the wind. And if you see that you're wrong, and the price keeps on going, you just have to cut it off, and that's it. Because you get volatility, and you don't know. Obviously it's overbought, so you don't know when it's going to turn around. And again, with the Trump yapping, it can happen today. It can happen in 3 days. So, all right. Let's see. What are your analysis for USD in the upcoming days following Trump's speech? Euro USD. I mean, Euro USD executed its perfect fucking deep pullback setup. This is what I wanted to talk about, honestly. The 702, baby, the deep pullback, right? Spoken about it endlessly, tirelessly in my previous webinars. The 618 to 786 deep bankers pullback, right? So wave one, wave two, wave three, wave four, exactly onto 702, and whammo, up we go. Okay. So right now, obviously, the probability that it keeps on running up. Maybe if you see a dip and a turnaround, I would do the same. So how do I trade this dip and turnaround? So we can remove this fib and we create a new fib. And if when you start seeing price, if you start seeing price dipping to these levels here, then you see a candle like this and another candle taking it out like this, right? The top of this candle. You go along here, you put your stop here and do this. All right. That's what you do. All right. Do you encourage hedging to save losing trade? No. Well, I'm in US, so I cannot hedge because we have first in, first out rule. All right. Obviously, there are other ways to hedge, but no. The reason why I'm not advocating for hedging, because when you hedge, you're still in the shitty. You're basically you're putting all your mental effort into the shitty losing trade. And when your headspace is when your headspace is being occupied by a loss, you are unable to see clearly. So it's easier to cut it off and move the fuck on and find a new opportunity. All right. Because then you kind of start afresh with fresh perspective and fresh head instead of instead of being driven by emotional states that are negative, meaning you're in a loss, you're in a loss, you're like, oh fuck, oh fuck, oh fuck. And nobody made money when they're saying, oh fuck, in their heads. Okay. So you need to clear the books, reset your emotional state, reset your palate. It's like having a bunch of food in your mouth, and then somebody gives you an expensive, something, a delicacy to try while you have a bunch of shit in your mouth, right? If you're eating McDonald's, Burger King, chicken wings, and some other shit, when somebody gives you caviar or steak, you won't be able to discern that it's caviar or steak because you have a pile of shit in your mouth. So, to put it simply. Same thing with the trade. When you have a hedge on and you're in a loss, your brain is your brain is focused on that loss, and it's not seeking the winning trades anymore. Okay, you can only focus on one thing at a time. And if you're in a loss, your brain is managing that stupid fucking loss, and you don't. So it's easier to close the loss and and take a break, step away, come back, and then you're gonna start seeing clearly again. I'm in a 7 trades drawdown. What should I do? Reduce risk or static risk and higher time frame. If you're in a 7 trade drawdown, obviously you should reduce your. If you're seeing that you're on a downwards path, you need to reduce your risk immediately. So you need to cut your positions in half or trade much smaller, because you need to have you need to stack some winning trades to see that your shit is working. Okay. So it's not about making money at that point. It's about reestablishing your psyche into the making it feel like you're a winner again, right? So you need to cut your positions in half, or trade 1/4 of your position size, and stack some winners first, because obviously something is not working. And when something is not working, or you're not in the right state, or the market environment has changed, you need to assess that first before you press on the gas pedal again. So slow down. Starting a business for cash flow or learn a new skill. How do I save my savings for inflation? Stand from inflation. Well, you have to own assets to save your money from inflation. That's the only thing. That's why stocks keep going up. That's why gold is keep going up, because they're an inflationary hedge. People, it's not that their value is increasing, it's just the money, the value of the money is decreasing. And that's the whole point of me harping and yelling about understanding what central banks are doing. It's not that gold is becoming more valuable, it's the fact that the dollar is becoming less valuable. Okay. The gold, the and so, since if instead of $1 now there's $2 to chase the one brick of gold, the brick of gold has to double in price. I'm in a basic macroeconomics, everything else equal type of deal. Do you understand? Right. And that's what happened during COVID. When we printed 30% of all existing dollars, all of a sudden started pricing starting doubling this, that, because the same amount of goods and services are being produced, if not reduced. You were reduced during COVID, obviously, because and we printed more money, so now everybody has more money, but the amount of goods has shrunk. So that's why the prices have doubled. All right, in a lot of cases, because you still have same 100 units of whatever widget, but now you have or even instead of 100 widgets, now you have 50 widgets, because production has stopped during COVID, right? And we printed 50% fucking money. That's how you get to 100%. Again, rough, but you should understand that. How do you say from inflation? Okay, which are the unbreakable key rules in your trading plan? Well, I do. The unbreakable rules are usually for novice traders. There's always exceptions, right? There's not. It's not black and white. But if you're one of the things, everybody has to go through a drawdown, right? Everybody goes through some kind of drawdown. If you're seeing that you're getting a lot of losses, that's one of the things. You cut your positions in half. Unbreakable rule is another one, is again small position sizing. When you're pissing against the wind, when you're trading against the trend. All right, that's a must as well. Usually, again, do not risk more than 2-3% if you're having trading a small account. I understand, right? So you're risking, but do not. Your job is to make your trading not about money, but about percentage term growth, right? If you can grow your account 5% a month on $1,000 and do replicate that on $100,000 account, that's 5 grand in your pocket every month. Now you're trading a million, that's 50 grand in your pocket. Now you're trading 10 million, that's already $500,000 a month. Ooh, same 5%, same 5%, right? So, or 2% or 1% or 10%, whatever. But once you start seeing a growth, and that's when a hedge fund is trading, Warren Buffett is trading 100 fucking billion dollars. He makes 25%. He made $25 billion that year. That's a lot of motherfucking money, right? But if you're trading your $1,000 account and 25% of it is $250, you're risking that pretty much every trade, right? So learn to trade in percentages. Once you learn to trade in percentages, not in the dollar amounts, or euro amounts, whatever the fuck you traded, um, once you start thinking about percentages, and you'll understand the game better. Okay, you'll be more careful with your trading. You will be more selective with your trades, and the name of the game is grow in percentage terms, not in the dollar amount. Okay, because at certain point, you won't be able to handle. You can, again. Why is everybody a goddamn genius on a demo? Right, on a demo, everybody trades, everybody wins, pretty much. Right, because you don't give a fuck. It's there's no emotional pressure for to influence your thinking. Then, how about you going to be trading a $10 account, right? Whatever. I don't know if it's possible or not, but I'm sure it's some. But for you don't give a fuck about $10. Same thing with 100,000, 10,000, blah, blah. At a certain point, you're gonna find the level where it's like, oh shit, I'm losing 5, 10 grand on a 100K account. You're unable to handle that pressure, right? So, or $1 million or 10 million. So hedge funds that are trading billions and billions of dollars, their P&L swings are in millions, millions. So if you're gonna start looking at P&Ls, meaning profit and loss in the dollar amount, you're gonna go nuts. So instead of that, you watch you treat it and you watch the percentages, because if you're able to make 5, 10% on $1,000 or $100,000 or $10,000, just replicate the same strategy as to the best of your ability to a larger account, right? Obviously, there are other issues with larger accounts like liquidity and blah blah blah, but none of you are trading hundreds of millions of dollars, so you're okay with that. All right. Which indicator would you recommend for me? I would recommend you to remove every single indicator from your fucking chart. All right. Learn to read the price. You need to understand the fundamentals and understanding reading the price, because every candlestick is indicative of what the psychology of the traders was in those situations. Okay. So your job is to understand the psychology of traders, not not you're trading against other traders, whether they're algorithmic traders or they are human traders. But algorithmic traders are algos programmed by humans anyway. So it's you trading against other brains. Okay, so you need this is a trail of thinking that that allows you to understand what's happening. Again, given the fundamentals, now you what's happening. This kind of reiterates: are you right about your fundamental thesis or not? So reading the price action is what you need to learn. All the indicators they're secondary. All right, like RSI, this, that, or this momentum indicator. Yeah, this momentum is you can see that we've been rallying ever since, right? Fine. But I barely, they're there as a like a legacy thing on me. I don't usually watch them, to be quite honest, right? They're like not even secondary. They're very they're just there. But the primary task is not to be relying on indicators at all. Your job is to understand what fundamentals are doing, and then looking at the price action and understanding if the price action is confirming what's going on fundamentally. And if yes, then obviously you're on the right side of the trades and you can make shit ton of money. What do you think about the politicians in the United States doing insider trading and making enormous $1,000 illegal? Yes, it is legal. And politicians, that's just why people go into government. They enrich themselves. Every single fucking, all of them. Obama was worth $2 million when, or $1.5 million when he went into politics. Now he's worth over $100 million. Same thing with the Clintons. Same thing with every single president. Same thing with every politician. They go there because it's power and money. So it's unfortunately in every and whatever country you're in. I'm sure your politicians are using taxpayer money to siphon off information, or they're doing something that's just unfortunately part of the world that we live in. And as much as everybody's saying it's unjust, and what justice are you talking? The laws are for poor people. You know what I mean? Unfortunately, right? It's normal people who get fucked by the laws. People who are in those in the governments, and they unfortunately they're all scumbags for the most part. So sociopath. And think about it: who the fuck wants to go to become a politician? For the most part, right? Yeah. So a bureaucrat, pencil pushing dickhead, right? All right. Hopefully, obviously, we can all hope and that it goes away. But okay, Trump ended his remarks. Let's see what happens. Anyway, this is why forget about all the doom and gloom. Trump knows that what his Trump card is very simple. Cut the motherfucking interest rates, and if he cuts it, that's why he's not sweating. You see, the markets are reacting positive now. They all understand that even if the stock market starts tanking, they're just gonna cut interest rates and it's gonna go right back up. And if that happens, go heavy on your to buying the dip. That's it. And you understanding this will allow you to prosper beyond your wildest dreams. All right. All right, boys and girls. It's been an hour of me yapping. I have another call right now coming up. I have to hop off. I'll see you Friday. Friday, don't forget, I told you on Friday we're gonna have two special guests, two very successful traders, and they're gonna offer you a different flavor than me because everybody, everybody does this differently. So you'll listen to somebody who with their own perspective and everything else. So be there Friday 9 a.m. All right. On that note, and next week I'll start doing more technical stuff for you. All right. So you can now understand because I think you kind of get the point, the importance of the fundamentals at this point. It's just I didn't expect that Trump is gonna go all in on the Greenland shit. That this price action will all be driven by technicals. I mean fundamentals and not technicals. On that note, I'll see you all. I'll see you all on Friday. Okay, be there Friday. Trust me, it's gonna be really good. All right. Cheers, all.